Hello everyone. We will talk about agriculture commodities. Before moving further, let's see what is a commodity. A commodity is a product having commercial value that can be produced, bought, sold, and consumed. Now comes a question. What is a agriculture commodity? Commodities that come from the raising of crops is called agriculture commodities. Now we will discuss about the agriculture commodities that are traded on NCDEX. These are classified into cereals, pulses, plantation products, spices, oil and oilseeds, fibers, and others. Cereals include wheat, barley, maize, pulses like chana, masoor, spices like chili, jeera, pepper, oil and oilseeds like sesame seeds, soybean meal, refined soya oil, crude palm oil, groundnut in shell, plantation products like rubber, cashew, fibers like kapas, raw jute, and other products includes guar seeds, potato, mentha oil, guar gum, almond. Now we will discuss about factors which affect commodity markets. These are classified into three factors. First is physical factor, second is economical factor, third is other factors. Now we will broadly discuss about physical factors. Physical factors like first is climate. Now climate plays a dominating role in agriculture as as we can say that plants require sufficient heat and moisture for their growth. So climate is a key factor in in is a key factor in agriculture product. Uh, let's take an example. Like we can say that wheat is a commodity, and soybean also comes into commodity. Wheat The sowing period of wheat is from October to December. The growth of wheat is from January to February, and harvest period is March and May. After May comes June, and June is the sowing period of soybean. So sowing period of soybean is June, July, growth period is August, and harvest period is September, October, November, December. This completes the one whole year. Now the main point here is the harvesting period of wheat is April and May, and the sowing period of and the sowing period of soybean is June and July. Now here comes that if the rainfall is more rainfall occurs in period of June, so the sowing period of soybean is delayed by 20 to 25 days, or even sometimes by 1.5 months. This affects the whole growth and the whole cultivation of soybean. So climate is a key factor, or we can say is a dominate it plays a dominating role in agriculture. Second point is soil. The richness of soil is another important physical factor which affects agriculture products. Third is topography. The nature of topography plays a significant role in development of agriculture, as topography determines the extent of soil erosion, methods of cultivation, and mode of transportation. Second factor is economical factor. In economical factor, first includes market. Now, market is an important economic factor in agriculture. Like market determines the distance and the cost of transportation. Second is transportation facilities. The development of efficient means of transport from market to the agriculture products, like we can say that farming land if a land is in interior, the market where these products are sold is around from 100 to more than 100 kilometers. So that affects the transportation facilities. The transportation cost and other factors are included in this. Second is, and one more point is cost involved in storage. Like there are two types of cost involved in storing a commodity. First is the financial cost, and second is the cost of physical storage. They both are need to be factored when we are computing the forward price of a commodity. The third point is capital. Agriculture in the modern times is becoming is becoming mechanized. This include huge capital investment like purchase of machinery, fertilizer, pesticides. These are all the factors which comes under capital. Other is labor. Labor is, as we all know, the labor charges, the cheap. Some area are there in India where cheap labors are provided, but somewhere the labor cost is also included. So labor is another key factor. Then the last is government policies. Government policies is one of most important because it it influences agriculture land use. Like we can say that government may restrict some cultivation of crops by forcing farmers to grow a particular crop. Like we can say, take an example of sugar cane or oil seed cultivated has increased in India on the account of greater emphasis put by the government on these crops. Subsidies are also provided by government on some crops, so so the production of that particular crop is increased. So these are all factors are influenced by government policies. Now comes the other factor. Other factor includes the technological development, or we can say that farmers are using modern farm technology in shape of fertilizers and high yield variety of seeds. Now, thus, this plays a significant role in the pattern and productivity of the agriculture crops. Now we'll move further. Now we'll see what are the indicators do an investor need to watch. First is land price, second is interest rate policy, third is inflation, fourth is harvest performance, and fifth is agriculture speculation. We will start with land prices. The land prices is a two-way relationship between the value of land and the value of agriculture product. Like assuming the productivity remains unchanged, rising and the rising land prices that tends to indicate the rising of agriculture products. Let's take an example that farming land is ne- is around 30 kilometers from Delhi, and another farming land is around say 100 kilometers from Delhi. So so first factor, that land price. So here comes the factor of land prices. Second is interest rate policy and agriculture. Now interest rates is a predominant indicator in any sector. Each farm crop each farm crop is an investment, and higher rates can lower expected earnings across the entire sector if borrowing and capital cost increases. Third is inflation and agriculture. Inflation does not affect all the products equally. The most impacted markets tend to be those in which the most money is circulated, such as oil and food, while the effects of cause of inflation are, are debated among uh, economists, and it is likely that inflation affect agriculture prices more than other commodities. Like let's take a live example of few months back uh, regarding the prices of pulses. There was a saying that in print media or in all the media there was a saying that the prices of pulses are so high that chicken can be bought in 100 rupees 1 kilogram, and the price of pulses may exceed rupees 100 per kilogram. So the inflation is also a very important factor which an investor should see. Now other is harvest performance. While changes in technique and technology have significantly improved farming and harvesting practices, agriculture performance is still largely influenced by weather related phenomena. as we have weather related phenomena we have discussed previously. Agriculture investors should pay attention to changes in weather patterns such as drought, temperature fluctuation, and storms. Like we can say that in year 2015, drought was announced in maximum area of Maharashtra, and in the same year, due to heavy rainfall in eastern part of India, the crops was affected. So as we can say that we can say that one factor weather is affecting one factor weather is affecting the prices of commodities. In one part, drought is announced, and in the and on the and in the same year, on the other part, heavy rainfall has affected the prices of the uh, crops. Now the last is agriculture speculation. Increased attention has been paid to the role of speculation on agriculture commodities market since the Great Recession of 2002 to 2009, particularly in derivative market. This is concerned that investors may cause extreme fluctuations in commodity prices if a large scale sell off is triggered. That's all. Thank you by Siddharth Sanodia and Niranjan Samadhiya.